Welcome to Money Matters. I'm David Crowell, and I'm the Senior Loan Officer for Mortgage Network. And this segment of Money Matters is being recorded on I believe the 18th of July, Wednesday the 18th of July, just to put it in a time perspective. Today I'm going to be talking about two things. In a previous segment, I talked about the trade war and the impending dislocation of international trade that would occur because of a trade war, and then I want to talk some more about that, and then switch to a very local topic about the housing market here in Hilton Head and what we can see happening over the next 6 months to a year in this housing market. So first, trade war. It's a fascinating subject. I talked about it in an earlier segment. The trade war is spreading. China has now embraced the trade restrictions and trade embargoes on approximately 100,000 products. Likewise, the United States, led by the Trump administration, has placed embargoes on about $50 billion of Chinese goods manufacturing intended for export to the United States. The trade war has not spread to other countries, but there is already collateral damage in other countries, secondary damage. Basically, the way to think about a trade war is not just in terms of the two participants, China and the United States, but in terms of all of the secondary and tertiary participants. For example, if the goods and services that are being restricted through China have their point of origin with manufacturers in Malaysia and throughout Southeast Asia, then those countries are secondarily impacted. If the steel, the dumping of Chinese steel in the U.S. market is impacted, then there is a secondary impact, positive in this case, in the import and the production of steel in other steel producing countries. So what occurs in a trade war is dislocation of markets. What also happens in a trade war is that nobody knows what's going to happen. Nobody knows what the impact, the true impact will be until well into the event, and some people would say until after the event. Economists, the reason is that in theory, a trade war works out equal. If you restrict, if there is a fixed market for steel in the world, and the United States restricts the amount of Chinese steel coming into the United States, that doesn't alter the U.S. appetite for steel. All that it does is alters the source of the steel, and therefore other steel producers will immediately make up the difference. And in theory, the market, the overall global market, works out even Steven. Markets are not that efficient, and that's the problem. It's very, very difficult to take that theoretical equivalence, which stems from a fixed appetite and a supply to meet that appetite. It's hard to do that in real time. Markets don't adapt that quickly. So what happens is booms and crashes in various sectors with a lag before compensating sectors, before compensating suppliers and compensating markets build back up again. Here's an easy example for you. The soybean crop in the Midwestern and Western United States, but the Midwestern United States, the soybean crop has not been harvested yet. It won't be harvested until later this year. However, the soybean futures are already down 30 or 40% ahead of that crop. Soybean farmers throughout the Midwest run their farms based on lines of credit from banks. Those lines of credit from the banks are based on the future value of the crop. So if the future value of the crop is discounted by 30 to 40%, then the banks that support the farmers are only going to lend 30 or 40% less, which in many cases will force those farmers either out of business entirely or very greatly deplete their reserves and put them in a precarious position. So all of this is happening without anything changing on the ground. In other words, the harvest hasn't even happened. It's not happening for months and months and months. The soybeans are growing. Everything's presumably happy. There's only one change, and that is that China has made a public announcement that it will not be importing its needed supply of soybeans from U.S. markets. It'll be imposing a tariff on soybeans coming from the United States. That means that soybean producers everywhere else in the world have the opportunity to supply the Chinese market at a price advantage. It doesn't, the reason that trade wars and the reason that tariffs and embargoes and any kind of trade restrictions are scary is because the markets are very inefficient and it takes a long time for adjustments to be made and a long time for people to, for economists to figure out what's really going on. Okay, end of that subject for the time being. We'll keep a watchful eye on it. It's a peculiar interest of mine, so I'll keep coming back to it. I just did want to mention for a moment the local real estate market and the local economy. Things are going very well. Baby boomers are strongly advancing into the market here. Remember that the baby boom was delayed in retiring and is now 72 years old. The lead edge of the baby boom is now 72 years old. It stretches back to all the way to people who are in their mid-50s. And this is a huge portion of the population. Also happens to be the portion of the population that at this moment has all the money, because these are mature people who have worked all their lives and they've got the dough. Hilton Head, the Low Country, and the entire corridor along the southeastern corridor are main target for the retirement of the baby boom. About 70%, 7 out of 10 people interviewed, say that they would like to go someplace that's warm and has access to water. We're it, stretching down to Florida and the Panhandle. So what we're finally seeing is a very steady flow of clients who are pulling the trigger and putting houses on the market in New England and in the Midwest and making their retirement plans. They are extremely well served by not only our local market of beautiful houses in all price ranges on Hilton Head, but they're also extraordinarily well served by the national home builders and regional home builders that are building throughout Bluffton and out into Ridgeland and Jasper County. So Exciting stuff is happening. The clients are here. The price range, the aggressive price range appears to be anywhere as low as $200,000 to as much as $800,000 or $900,000. This is on, off island. On island, it's skewed slightly higher from about $400,000 to $500,000 up to about $1.5 million is the bulk of the market. Things are going well. I look forward to talking to you soon. This is David Crowell from Money Matters and from Mortgage Network.